Take-Two Interactive shares falling in after-hours trading despite revenue more than doubling. Why its next hit game is a long way off. I'm Emily Chang, and this is Bloomberg West. Coming up, Twitter's interim CEO Jack Dorsey buys shares of the company and tweets he's investing in, quote, Twitter's future. I'll be joined by the analyst who says to follow Dorsey's lead. Plus, GoDaddy CEO is here to tell us about the hottest domain names you may not expect. And a first for mankind. Astronauts eat food grown in space. What it means for a manned trip to Mars. All of that ahead on Bloomberg West. First, to our league, Take-Two shares are dropping after hours. The maker of Grand Theft Auto missing on earnings per share, but beating on revenue. Joining me now for a full breakdown of the results, our editor-at-large, Corey Johnson, as well as Patriarch Equity Chairman Eric Schiffer in L.A., a gaming investor, and Kristian Segerstrale, COO of Super Evil Megacorp, with me here in the studio. Corey, I'll send it out to you first. Break it down for us. What's standing out to you about Take-Two vis-a-vis EA and Activision, which earnings we got earlier this week?
Yeah, so I think, what really we're looking for with Take-Two Interactive is not just this quarter, but how they're setting themselves up for the sweet spot in the console game business. That is, when the number of consoles out there ramp up. Because we know Take-Two Interactive's games are well loved. It goes beyond, of course, the Grand Theft Auto franchise to some of their other big games. But what we see from the quarter that they just reported, where the sales were very strong going into this, and we're going into a period where we're going to go from about 26 million units of the new consoles, the Xbox One, the PlayStation 4, to as many as 50 million, almost doubling in 1 year. So Take-Two's new releases are so important because they're going into a much larger market. So what we see from this is none of the release dates seem to have slipped in the major games that are coming in the future. The games they've got seem to be doing quite well as the installed base gets so much bigger. I think at this point of the game, earnings per share is not so important as it will be in the next quarter. You see what I did there with this point of the game? It's kind of like a game. Game joke. Pun
intended, Corey Johnson. I should say EA and Activision earnings have come out over the last several weeks. Eric, I want to send it out to you. You're an investor in Activision. Why Activision and not Take-Two? And why is this next Grand Theft Auto game going to take so many years to come out? 2017?
Well, look, I think Take-Two is a very good company. I think the problem with Take-Two is that they're focused on these mega hits. And the problem is that you have these long periods in which you don't have any development. It can take 2-3 years to do the next Grand Theft Auto. That's a long time. So you get these periods in which your revenues get hit. And we're going into one right now. I think by fourth quarter, you're going to see a significant drop. And they're going to have to wait for these next set of games, either the WWE game, hopefully we're going to see the NBA, 2K, and you may actually see the Red Dawn, which is going to be, if they do it, and they should by this year, early next year, a monster game. It's a very high quality one. So I think they have a great company. It's more of a long-term play in my perspective. I think if you're looking in terms of the short term, it will likely get hit more. And I think that's why we're seeing the investor response that we saw today.
You've got EA coming out with a new Star Wars game later this year, Activision coming out with a new Call of Duty game. Kristian, you're a guy who straddles sort of both of these worlds. In your current job, you're focused on more social mobile gaming as a co-founder of Glue, for example. And yet you also worked at EA. How well do you see a company like Take-Two adapting to the changing tastes of gamers and the fact that you have all of these other kinds of games competing for mindshare?
Yeah, I think what's really going on here right now is two stories. One is the console install base is growing. It is true, 50 million units is around the corner. That said, if you compare that to, say, the amount of smartphones and touchscreens out there, which is already in the billions, it ultimately, the broader industry is in transition, where we're going away from models where you sell the game on the opening weekend and then you have this long time when you don't make any revenue, and then there's the next addition to the game, where you have a much more ongoing revenue stream from these games. And I think the big story between EA, Activision, and Take-Two, for example, is how quickly are these companies adapting to games moving from being products that you buy off the shelf to being services that consumers consume over time and also pay for over time, which both is better for gamers, frankly, who expect services these days, and is also better for investors because ultimately it drives a more profitable, more predictable revenue trajectory for a company.
So, Eric, how well are the gaming companies doing that? How well are they moderating that transition?
Well, I think some are doing really well. I think if you look at EA, they're doing extremely well. The challenge with this company, with Take-Two, is that they really don't have execution on the mobile side in any significant way. And as Kristian said, there's so many other platforms to be able to get gaming today, and certainly smartphones and certainly iPads, etc. And that's just not where Take-Two has dominated. The quality of their gaming in that arena is much less. I mean, if you look at, just for instance, the Grand Theft Auto on the iPad, it's just not as good. And they've got to get that right. They're figuring out how to leverage China, but they haven't been able to increase from a significant revenue standpoint and a user base yet. I think it's possible, but it's not proven.
All right, Eric Schiffer of Patriarch Equity, our editor-at-large, Corey Johnson, thank you. Kristian, you and I are going to talk a little bit more about esports, because your company, which has the best name ever, Super Evil Megacorp, best name ever. You guys just raised $26 million, and you're pushing into this area of gaming called esports, whereby gamers organize sort of competitive matches with each other. Why do you think esports are going to be a big deal?
Well, so if you look at how gaming has evolved over the past 10 years, some of the most lasting franchises, both in PC and console, have actually sort of organized themselves around close-knit communities that are typically competitive over time. So whether you think of how a League of Legends by Riot Games, for example, have grown, or even Call of Duty or Counter-Strike, these big growing franchises are all really centered around community-based competitive play. In fact, there's already over 100 million players engaged in competitive play and esports today. So our dream at Super Evil Megacorp with our game Vainglory, which is also a mobile online or multiplayer online battle arena, rather, where two teams of three kind of compete, is to build a core gaming franchise, if you like, to free up this sort of core gaming from your console and PC and enable the billions of people with touchscreens to take part. And for that to be successful, we believe one of the very important components is, of course, to have a great game, but also to be able to build a community around it, which plays it, if you like, in the backyard for fun, at a club together, and at the highest competitive levels in stadiums that people watch all over the world.
Now, quickly, do you think that the person who plays a social or mobile game on Zynga or the Kim Kardashian game on Glue is a completely different person than the person who would play an esports game or Grand Theft Auto or, the new Star Wars game?
Yeah, typically it would be. We would define our market and the core gaming market in general as people who schedule their lives around gaming, where gaming is a legitimate activity. It's like you go and play basketball, you go and play computer games. It is a hobby of yours. Whereas games to kind of quote-unquote kill time when you have an extra 3 minutes is a different form of gaming, and they are both big. We believe right now that around 70% of all spend in the computer games industry is in core gaming overall, and that has not really yet taken off on touchscreens. So we are pretty excited about helping bring about, if you like, the growth of core gaming as a category on touchscreens. Core gamers today spend mainly on consoles and PC.
All right, Kristian Segerstrale of Super Evil Megacorp will be following the esports market. Thanks so much for joining us today.
Thank you for having me.
Well, the Tesla Model S is the world's most connected car and also one of the world's most secure. But two hackers say they may have finally cracked the code. They did finally crack the code. Bloomberg West got a first-hand look at how they hacked a Tesla at the DEF CON Hacker Conference in Las Vegas.
My name is Mark Rogers. I am a principal security researcher at Cloudflare. And I'm a hacker in my spare time.
I'm Kevin Mahaffey. I'm the founder and CTO of Lookout. And I'm here because we hacked a Tesla to build safer cars in the future.
Elon Musk is a real visionary. We wanted to look at his car and see how good was it? Really, was it like a benchmark for the industry? Were there any issues? And if so, what were they? I have hacked a lot of things. I hacked the iPhone, I hacked Google Glass, but the Tesla, it took a little bit of time.
It wasn't a case of us simply hacking the car. We had to attack one system, gather some information, use that to get access to another system, gather some more information, and then finally use that to get more information, and we were able to get full control over the infotainment side of the car.
So in the case of this car, that means you can do everything that the touchscreen UI can do. So you can pop the trunk, you can honk the horn, you can flash the headlights, you can unlock and lock the car, you can switch the car off.
The biggest takeaway is that cars are computers. Your car has more in common with your laptop than it does the Model T. And with that in mind, we have to think about cybersecurity issues just as much as we have to think about safety issues with car crashes.
Things get hacked all the time. I'm a hacker. That's why I hacked the Tesla. If I'm not hacking it, someone else is going to be hacking it. And there are hackers out there who will be doing this maliciously. So vulnerabilities will be found. What you want is, you want them to be found by the good guys. So this is the software update that we worked with Tesla to prepare to fix the vulnerabilities that we identified as part of our research.
All you have to do is click install now or set it to install overnight and your car will be patched. And they can push this out really quickly.
By the time we give our talk, the vast majority of Teslas will already be saved.
Up next, investors look for clues as to who is going to run Twitter as executives buy up shares. And one small bite for man, we'll tell you why this harvest of space lettuce may be a key to a future on Mars. Another big story we are watching today, the soap opera of Silicon Valley. Twitter rising as much as 9.6% today after it unveiled a content deal with the NFL. But another reason for the stock rise, interim CEO Jack Dorsey promoted his purchase of about $875,000 worth of shares with a tweet. Twitter CFO Anthony Noto, board members Peter Fenton and Peter Curry also buying shares of Twitter according to regulatory filings. So are these moves enough to sustain confidence as the company continues its search for a full-time CEO? Joining me here in the studio, Sarah Fryer, who covers Twitter for us at Bloomberg News, Techonomy CEO David Kirkpatrick, and James Cakmak, analyst at Monness, Crespi, Hardt, who recently put a buy rating on Twitter. But Sarah, I'm going to start with you. You've been breaking Twitter news all weekend. Number one, you reported that Dick Costolo is likely going to leave the board as soon as a new CEO is announced. But bring us up to date here, because Jack, Noto, Peter Fenton, Peter Curry buying shares, but Ev Williams has been selling shares. What's happening?
Ev Williams has been selling a lot of shares, hundreds of millions of dollars worth. Jack Dorsey, for his part, has also been selling shares. Overall, if you look at the insiders and board members and executives, more sells than purchases. This purchase that Jack announced today is actually his first since the IPO.
Really?
So, I mean, it's not the first time that Twitter has tried to use executive purchases as a way to pump up some confidence.
Right.
I think you remember during the when the restrictions lifted on insiders after the IPO lockup, they also all pledged to hold on to their shares to drum up confidence.
At the same time, you're reporting that as soon as a full-time CEO is named, there's going to be a board shakeup. Dick's going to leave. They're going to bring in some new, other diverse candidates. James, I want to bring you in here. Why are you saying buy now? Twitter is at, among the lowest points since its IPO. Why should we buy now?
Hi, thanks. We've been on the sidelines since our initiation back in November. But essentially, with the stock down 52% from its peak, we do think now is the time to get constructive. And really, it boils down to a couple of things. There's obviously still some risks with the CEO transition, but ultimately, Twitter has tremendous amount of strategic value. They're synonymous with real-time content. And really, when you think about the future, mobile and native, it's Facebook and Twitter are among the two companies best positioned to capitalize on that. And plus, you have limited downside to estimates.
James, hang on for a second. We've got some big breaking news now out of Google. Google announcing that Sundar Pichai, who's been running day-to-day operations at Google now for a very long time, for CEO Larry Page, will become CEO of Google. Larry Page will go on to be the CEO of Alphabet Inc. Sergey Brin, the other co-founder of Google, will become president of Alphabet Inc. We're still digesting this news now, but I want to bring in David Kirkpatrick on this. David, obviously, you've covered Google for a very, very long time. Now we're seeing that the co-founders of Google are moving on, so to speak. We're still trying to find out a little bit more what this Alphabet Inc. actually means, but not a surprise that Sundar coming on to lead all of Google. What do you make of this news?
Well, he's a great veteran who really understands the business inside out and has been there a long time, but I'm taken aback, as I think you must be. What the heck is Alphabet Inc.? I do not know. I think that, actually, Larry's done a really good job to, I think, rebuild confidence in a lot of pieces of Google. I think the stock market has not totally bought into every bit of it. And his health has been a challenge pretty much the entire time he's been CEO, so I think that might be a factor for him. But, I mean, Google is a machine that will continue powering forward, and I know that Sergey and Larry will remain involved. That's a given. So I don't think you're going to lose their intellectual capital, so to speak.
Right. David, I'm reading now from the press release. Larry saying, what is Alphabet? Well, here it is. Alphabet is mostly a collection of companies, the largest of which, of course, is Google. This newer Google is a bit slimmed down with the companies that are pretty far afield of our main internet products contained in Alphabet instead. What do we mean by far afield? Well, good examples are our health efforts, life sciences, Calico, which of course we know is focused on longevity. Fundamentally, we believe this allows us more management scale as we run things independently that aren't very related. So huge shakeup in the operating structure in general at Google. David, what's your reaction?
Well, it sounds to me like Alphabet Inc. in some ways is a new name for what we've previously called Google, which was, we always knew, aside from a massive profit-generating, search advertising engine, a lot of interesting but not hugely profitable or even profitable at all entities like, their work in the cars and the glass failed effort, etc. So maybe they're folding all that into this bigger entity in order to emphasize that, it doesn't really affect their ability to be a monster search-based ad engine, but they're also going to do this other stuff. But presumably, the shareholders of Google are now shareholders of Alphabet Inc., I would assume.
Larry Page adding in this memo, a key part of this is Sundar Pichai, who has been saying the things that I would have said, and sometimes better, for quite some time now, and I've been tremendously enjoying our work together. Sundar, of course, has stepped up tremendously since Larry gave him the reins to run a lot of things at Google. Sarah, what do you make of this news as obviously someone who covers Silicon Valley and has been following Google now for many years?
I think it's very interesting that we're seeing one of the top people at a company that is founder-led getting elevated to a CEO position. That's something that people have said wouldn't happen at Google, that it wouldn't happen at a place like Facebook. Sundar Pichai, of course, has been recruited by companies like Twitter in the past and used that to get more power at Google. Finally, they're sort of recognizing that he's at the point where he could run the whole thing.
So, David, what do you make of this? There's been criticism of how Larry Page and Sergey Brin have run this company, that they've been spending too much time and energy on moonshots and not focusing enough on the core business. And the core business has really changed as Google has matured. And Google has potentially ceded a lot of territory, especially when it comes to mobile advertising, to Facebook. Is this a recognition that some of that may not have been going so well and that they really do need a dramatic change to keep Google moving forward in its core business?
Well, I think you can speculate about a lot of stuff, but I will say, in general, in today's business environment, focusing too much on your core business can be fatal. Business changes too fast. I admire Google tremendously for having seeded all these other efforts, none of which really are having any kind of meaningful contribution to the bottom line. Of course, YouTube, which they acquired, is a huge factor in their business. But, obviously, they are challenged by Facebook's increasingly powerful ad business and its incredible targetability, the successful move to mobile. That poses a big long-term challenge to them. I do think they're smart to be building these other businesses, however.
It's so interesting, though, David, isn't it? This after Google just blew out earnings and added like 20% to its market cap after that first historic call with Ruth Porat, the new CFO at Google. I'm reading more from Larry Page's memo on this, and he closes by saying, we're excited about getting more ambitious things done, taking the long-term view, empowering great entrepreneurs and companies to flourish, investing at the scale of the opportunities and resources that we see, improving the transparency and oversight of what we're doing, making Google even better through greater focus, and hopefully as a result of all this, improving the lives of as many people as we can. Well, that all sounds great, but competition for Google in its core business, which is advertising, is stiffer and stiffer when it comes to Facebook. Obviously, we have Twitter eating away at things, and there's still a lot of questions, Sarah, whether these moonshots are going to amount to anything.
Absolutely, but to your point, this is the time to make this kind of move. When your company is doing well, had a great quarter, that's when you make these big dramatic changes that otherwise might spook investors or be a sign of defeat, right? You know, Google's not coming out and doing this after being clobbered. They're coming out and doing this while they're riding high, while their stock has been on the increase. And so, you know, maybe this is when they can get away with it, and it is showing commitment to this core business in a different way.
And just to recap, Larry Page becoming CEO of Alphabet Inc., Sergey Brin becoming president of Alphabet Inc. Alphabet Inc. is a collection of companies, including Google. Sundar Pichai, longtime Googler who's been running Google, the day-to-day operations now for a very long time, will become CEO of Google. David, as someone who's covered Facebook as well for a very, very long time, what are you going to be watching for in this new world of Alphabet that has been Google for so long?
But I just am still trying to digest it. But I'm just reminded, the other night I was at a dinner party and somebody was interrogating me, why does Google do Google Maps? And I was thinking, you know, it does take some explaining what their ecosystem is, but ultimately most things they've been doing have really tried to drive you back ultimately to their service in order for you to see more advertising, and I think Maps would be said to be one of those. On the other hand, the new stuff like the car, the pharmaceutical, you know, the life extension products, those don't do that, so they really, maybe there is a real logic for a holding company model. You know, it's an extraordinary company that I think all of us would have to admit is possibly the most earth-shakingly significant, world-changing business that we, you know, feel the influence of every day in our lives. And, you know, we can't help watching this with incredible fascination. And I
love that word, earth-shaking. Earth-shaking, David, as we've been trying to digest this news live on the air. Again, Google changing its corporate structure to separate search, YouTube, and other web companies from its research and investment divisions, divisions like Google X, which will also be part of the new Alphabet company, Google Inc., Calico, Google Ventures, Google Capital. I want to bring in James Cakmak of Monness, Crespi, and Hardt, who was with us earlier talking about Twitter. James, you also happen to cover Google. What do you make of this news?
I think it makes total sense. I mean, they've been telegraphing that Sundar has been increasingly going to be taking a bigger and bigger role at Google. And really, we see Google relatively disadvantaged in mobile relative to the five horsemen, we call it: Facebook, Pinterest, LinkedIn, Snapchat, and Twitter. Those are the companies that are optimized for mobile. And having a guy like Sundar come on board, very operationally focused, product focused, and removing that from the moonshots, I think is certainly a good thing. So,
okay,
you know,
but what about all the
sense.
moonshots? What about all the moonshots? What sort of standards will they be held to from a Wall Street perspective?
Yeah, the moonshots I think are fine as long as the core business is optimized for the future. The future is about mobile and the future is about native. Unless the only asset that Google has really that can capitalize on that seismic shift is YouTube. And YouTube is doing fine and dandy and everything, but in the meantime you have Facebook breathing down your neck and doing so in a very curated fashion where you know you're getting the right videos in front of the right users at the right time to engage. That's something YouTube doesn't really have. So I think a guy like Sundar can bring focus, much needed focus into the company that wasn't there before.
Larry Page writing, we've long believed that over time companies tend to get comfortable doing the same thing, just making incremental changes. Our company is operating well today, but we think we can make it cleaner and more accountable. David, I'll leave it to you for closing thoughts. We only have about 60 seconds more in the show.
Referring to your earlier guest, they don't want to be seen as super evil Megacorp, which I think sometimes they have been. And it could be that this will put more of a spotlight on some of these really interesting other activities without allowing them to be a distraction from their true massive profit-generating machine. So, you know, I always look at these people with fascination, and I will continue. I think they're an amazing company, brilliantly led, and they will continue to be.
Google, whose motto has been "Don't be evil," now becoming going under the name Alphabet, a major shakeup to Google's corporate structure. We'll continue to cover this, of course, tomorrow and throughout the day on Bloomberg Television. Thanks so much for joining us on Bloomberg West. We'll see you later.